pretty much know, we have coming up in the next couple weeks a huge event that is going to tremendously, potentially massively impact the financial markets. And of course, that is the US election. US election is important because, depending on who's going to come in office, depending on what type of policies they're going to put into place, could positively or negatively impact the market. It could affect things like inflation, interest rates, employment numbers, things that we follow on a daily and weekly basis to determine what's going to happen in the market and how we're going to trade. So I just kind of want to go over some data points and some interesting charts and graphs I found to kind of give ourselves an idea of what the market could be doing during these times, how we're going to handle these situations, and do a little bit of back testing, look at the market and see how the market has passed over time. So one thing I want to show you guys really quick, something that I found to be very interesting, is here on our Oanda website, we have this topic. They covered the US election and financial markets. And we have this chart here, first and foremost, covering the DXY and how dollar index has performed over the past 1, 2, 3, 4, 5, 6 presidents. So if you can read right here, it says of the past 6 administrations, the dollar performed best under the Clinton administration, gaining 19.61% value. In aggregate, across all Republican terms, the dollar lost negative 36%, while over the Democrats, it grew 54.37%. So we can see here, especially in the last election cycle we had with Trump, the dollar was pretty steady, pretty consistent, but as the end of his term, when he started printing a bunch of money from COVID, let's say it was a good or bad thing, I'm not picking sides here, but you can see the dollar dropped. And over time, once inflation grew, the market had to overcompensate with increasing the interest rate, which brought the dollar back higher. So it's something to consider whether a Democrat or Republican wins. This can give us an idea of where the market may want to go. Another interesting chart, of course, we have unemployment numbers. Unemployment now could be a little bit more skewed in the past election cycle because we had COVID. Obviously, the market shut down drastically and then reopened, but it's just interesting to see, again, the majority of Democrat terms, we had the best overall job numbers. And GDP, it says to date, President Biden boasts the highest average GDP gain, inflation rate. So it says while in office, President Trump kept inflation rate closest to the US target of 2%. So again, during the end of COVID, you can see that tick up, although most of his presidency, we did have it around 2%. Then inflation skyrocketed to almost 9%. And thankfully, we got that back down. So I just want to show you guys this chart real quick because I thought it was really cool to compare over the different terms of presidents. Now, what we really want to take a look at in this is the charts. We want to take a look at, obviously, the dollar index because that is the main driving force behind most of what we trade. And we could take a look at the stock market as well, but over time, the stock market has always gone up. Especially like when you're talking, unless we're in a serious recession, it doesn't really matter what president or whatever, the stock market has always gone up. But if you're trading currencies and Forex like I am, and also commodities like gold, the US dollar is very important. To the stock market, not as much. It still plays a role, but definitely not as much. But I just want to show you guys here. Obviously, you can see the past couple months, we've been in a huge range, a large range, where if you're in the winner's circle, if you've been in the winner's circle for a while, you've seen that I've called out this October high from last year. We're waiting for price to come up to this level and eventually short from this high, which it took a few months, April, May, June, July. We finally got a breakout of this range here. Price accumulated and distributed price more to the downside. to where now we're at the bottom of this range. Now, although it seems as though the market wanted to head down further, because we did have this 1 month here where we created a new low, we failed to break this low here, which was actually July of last year. Not only that, we also have a bunch of structure to the left, and our previous election cycle, which was 2020, you can see this is where this low was created and structure was respected. So this right here is like the top of 2020. This is 2020's highs, where we had our previous election year. And I believe the exact date where the election was held was November 3rd. So November is right around down here, right? And we're going to get into that later to dig in deeper to that. Now, the market's way above this November low. Some crazy stuff would have to go on in the economy for the market to drop back down to this 92 area where we had this election cycle actually start. But as you can see, during that election year, we did make highs here and the market pulled back. Eventually, going through what we went through with COVID, the market skyrocketed, right? Now, I think although there's not any major pandemics or anything going on, based on just structure here, looking to the left, it looks like we're respecting the structure to the left, and I think we have more upside on the dollar. Now, we still don't know who's going to be president yet, so there's still a lot of confusion and uncertainty in the market. This is part of the reason why I think we've been having kind of like a discorrelation between gold and the dollar index. You know, they have not been correlating the past couple weeks as they usually should. If you look on gold, even just on the 1 hour time frame, it's just up, as opposed to DXY is also up, which is very unusual that you'd see this. But the whole world is looking at the US election. They're not sure what's going to happen. They're not sure on what another Trump presidency is going to look like, or what a Kamala presidency is going to look like. So a lot of people are looking into buying gold right now. So I do think after the elections, gold will return to a little bit more normalcy, depending on whether the dollar after elections decides it wants to increase in value or decrease. We could get prices up higher on gold. But if we do, I believe after the elections, if the dollar continues to increase, we'll probably get some big pullbacks, some big sell-offs on gold. Overall, obviously, it's still very bullish. There's still a lot of upside, but there's not that much data to go by and say, okay, gold's going to go to this level or this level or this level. We can speculate and say it's going to go to a nice rounded off even level like 3,000, but we don't know for sure. So gold, my game plan, especially with commodities, I'm going to be trying to trade with the trend as much as possible going into the election cycle. So I'm going to try to shy away from shorting gold right now until the actual numbers come out from the election, which is November 5th. Sometimes with counting ballots and stuff, it could be a couple days. The last election cycle, it took a couple days with the mail-in ballots and COVID and everything. So who knows, we may or may not know exactly on November 5th, but at least until then, or the following week after we know who's the president, I'm just going to be following the trend and looking to buy dips on gold, because people are going to continue to buy gold as they are uncertain as to what's going to happen with the US election and the economy. Now, GU has been a little bit more consistent with the US dollar. We can go back a little bit on GU to the previous election cycle, to 2020. Let me just go to a monthly level. So let me go back to November 2020. Oh, we went back way too far. We're in 1999. Word. Let me move this, hit this. And we've got November 2020. So see here. So this is October. Let's fast forward a little bit. So yeah, we've got the third. Let me just double check and make sure I'm right here. I think I'm right. Election Yeah, November 3rd. So November 3rd, 2020 is right here. You could see we got that kind of push up on GU there. And then the following week we continued to rally. If we compare this to DXY, let me go back on this. I want to see what DXY to make sure that they actually correlated. So you can see there was a correlation between GU and DXY. We continue to have that correlation. On the 3rd, we did have this push down. The following day, we retested these highs and then continued to short. So the correlations are always pretty strong with DXY and GU. And one of the main reasons of me going back and doing this is because if you notice, these levels are still significant. These price levels, this is like around where we're at right now, where current price is right now. So we want to pay attention to where these highs were made. I actually highlighted a few of these areas where we had significant support and resistance areas, so that when we go out in the future, we can obviously see that we're below these zones. So we're below the previous election levels. 133.73, 132.81, 132.16. So we're way past that. As long as I think we can maintain below this, overall, I would say GU is going to continue short. This supports my bias of having a strong dollar, that the dollar will continue bullish. So I just wanted to kind of just remind you guys that nobody knows what's going to happen for certain, but it's helpful to go back in the past and see how the market reacted, where price was at prior, depending on what pair you're trading, where price was at prior the previous election, to see where the current price is in relation to that. My next kind of game plan I'm going to be going into is making sure that going up to the election, you're not going full tilt. You know, there's going to be a lot of size movement and momentum in the markets. If you look here, even on a daily time frame here, last week was very kind of just sideways movement, just slow drips to the downside. We did get a nice push down here, but then price just keeps going up and down. There's no, it's a downtrend, but it's not trending strongly. So going into the election, I predict we're probably going to have more movements like this. We may have an accumulation phase where the market will consolidate, and then we're going to wait for a breakout and a clear trend before really putting the gas back on these trades. So I'm going to make sure that I'm these next couple weeks cutting down position sizing and trade quantities, and also trying to avoid no news days that there are no news, because news is good. News could serve as a catalyst for us to actually fulfill these moves in the market, but without them we can have more consolidation and more sideways momentum, more BS, which is what we don't want. So I'm going to be avoiding that. So that's pretty much all I have for you guys. Going into the election, if this is your first election trading, you just want to make sure that you're not going full tilt. You're winding down your position size, and making sure that you see a clear trend before you actually hop in the markets, right? So I wish you guys happy trading. In the next couple weeks, we'll see how the market performs, and I'll have some more content coming to you soon. If you guys want to see more of my daily analysis, daily breakdowns, and also get some of my signals, the link is down below in the description to the Commas and Culture Winners Circle. We also offer a course on how to trade my strategy. And yeah, I've been trading for almost 9 years now, so I'm definitely someone that you can lean on, rely on, ask questions. I'm here to help, and I'll catch you guys later. Peace.